Well, we have seen month after month the reports out of the big cities in this country and even some of the smaller communities further afield that housing is just on fire. We're at a point now where people are starting to get very concerned about the health of this market. Just the other day, our Amanda Lang spoke with Benjamin Tal, he's Deputy Chief Economist at CIBC, and basically saying, it's time we start looking for solutions to this. Take a listen.
Clearly, we have to do something about it. This cannot continue. Supply is the solution. And there are two elements to this solution. First, free some land in places like the GTA. That's one thing. The other, much more important, make rent as the solution. We have to create a situation, Amanda, in which you are 35 years old, you are married, you have two kids, and you are renting. Nothing is wrong with you.
All right, so the discussion is firmly in the place now. What do we do about all this? How do we even change our mindset about housing and how we live? Let's bring in John Pasalis. He's president of Realosophy, on the ground in the Toronto market. John, thanks so much for joining us. Let's start moving the conversation forward in terms of what you think we need to do to start addressing the problem that we're seeing now.
A great question. The challenge with Benjamin's suggestion is that supply is not a solution for today. What he's proposing, and he's right, we do need more purpose-built rental. In an ideal world, purpose-built rental geared towards families, but that's a 10-year plan. So we need to be thinking about what we need to do today to calm our housing market. And the reality is, policymakers are in a bit of a bind. We have rates are certainly not going up anytime soon. Macro-prudential policies might take some time to put in place, but the first thing they could be doing is trying to calm the markets down. I think the message from Ottawa has been a bit problematic. It's been that, there's nothing to worry about. This market's not overheated like 2016, and it's just going to keep going because we're going to keep rates low for the next 2 years. And I think that's the wrong message, and I think that's actually fueling these extravagant expectations that they're actually worried about.
Yeah, there's a lot of things at play, but I have to think that if a 5-year fixed right now was 7%, we wouldn't be having this problem. But as you said, the central banks aren't going to move off because they have the broader part of the economy to worry about. So what exactly can Ottawa do to start saying, okay, well, if the cost of money is not going to dissuade people, how do they dissuade people?
Yeah, it's a really tough spot because we have this stress test, and that's been one of the surprising things about sort of the transmission of kind of the lower rates we're seeing today, how that has translated to higher asset prices is a bit surprising because, 5-year rates have gone down about 100 basis points since before the start of COVID, but the buyers have only seen about a 40 basis point decline in the mortgage stress test. So they haven't really benefited in terms of buying power very much. So my instinct is if the government's going to do anything in the future, it's probably not going to be for first-time buyers. I don't think it's going to be targeting the average home buyer. If they do anything, my instinct would be that they're more likely to target investors. I think politically, I think it would be probably a little bit easier for them to do that rather than make it more difficult for first-time buyers to get into the market.
So when you go after investors, and I know you've done a lot of academic work on this, where are the pressure points that would make an investor think twice about wanting to hop into the market? Because right now we're hearing stories about someone who buys a house in December, puts a coat of paint on the kitchen, and then sells it for a 28% profit. That just lures them in.
Yeah, 100%. There's different ways to target investors. One, of course, is taxing capital gains at a higher rate, especially if you're flipping properties in a very short period of time. The other is making it harder to buy them by increasing the down payment requirements. Way back when, down payment requirements for investment properties weren't quite high. I think they were about 5%. They increased them to 20% a little while ago. And should they increase them to a little bit more than that? Possibly. And I think that will certainly take a little bit heat of the market because what we're seeing right now is a shift from just active buyers looking in the market to a lot of investors wanting to jump in. When you see 30% year-over-year price gains and the message from Ottawa is this is going to keep going, it's not surprising we're seeing investors rush into the market right now.
When it comes to the point you were making earlier in the show that building is a longer-term play, when I think about the GTA in terms of its density, in terms of land use, even where I live, I'll tell the audience what I told you during the break. About a month ago, we got a notice from the city that I live in saying, hey, we want to have a little meeting where we reimagine your home, Greg, as a condo tower, I knew there would be these pressures coming in the future. I didn't know it would be this quick, but we haven't done a lot with density. We grew the GTA, kept growing it out, growing it out. That seems to be a shift that is going to come. Would you expect more of that? More people to get notices like I got in terms of, hey, what do you think if we just turned your house into a condo? I was like, well, we pretty much have to tear my house down first.
Yeah, I mean, I do think we're going to be seeing more of these trends. I mean, I think, of course, and it's going to be a mix of both, condominiums and, what we hear a lot about, the sort of missing middle type housing, where it's certainly higher density than the suburbs are used to, but not necessarily, 50-story condo towers. And I think the challenge is going to be, can we build family-sized rentals? I mean, pretty much the only thing we've been building in the GTA in terms of rental, at least up until now, has been small condominiums, because we've been leaving it to, mom and pop investors to finance them, and that's what mom and pop investors want to buy, 400 or 500 square foot condominiums. So how do we shift that to build larger family-sized rentals? I think is going to be a big challenge in the future.
And I think on the affordability point too, right? Because I'm thinking at this stage, for a family to rent something that would house a family of 4 or 5 people, you can't get the micro condo. I mean, you can't even, one person can barely move in them. And you're looking at a substantial monthly rent payment that would be a lot more than a mortgage. I mean, the math, the incentive there, the financial incentive just doesn't seem to be in place at the moment for people to reimagine how they might live, whether it's renting or buying.
Yes, I mean, 100%, especially when it comes to the condominium market, right? And that's the supply that we've been building in the rental market. And the math doesn't make sense to have a 3-bedroom condominium that's 1,200 to 1,300 square feet. I mean, that's like that's just as expensive as a low-rise semi-detached house, right? So that's not necessarily a solution. And I think that's, again, going to be one of the big barriers. I mean, it's great to have and to want to have larger purpose-built rental units. It's another thing to actually build them. At the end of the day, builders are going to build what they want to build and what people are willing to pay the top dollar for.
Would you hope that we're going to see something in the spring budget from the federal government when it eventually arrives and starts to tackle some of these issues?
Yeah, I mean, I think we need something. I do think we need, I mean, like I said, I think the first thing is to shift the narrative, and that alone might be enough to kind of take some of the heat off of the market. So I think you would need to do that before you even put in any policies. But if that's not enough, I mean, certainly I think we need to do something. I mean, I think it's become incredibly difficult for first-time buyers to get into this market. I mean, if your budget is under $700,000, you basically cannot buy a house in the entire Greater Toronto area. And I think that's a very big problem, just even for our economy going forward in the future.
John, it's always great to get your insight. Look forward to our next chat.
Thank you.
John Pasalis is the president of Realosophy.